Good afternoon. Today I'm just going to give you a bit of a flavour of how Antipodes Partners invests money by way of a couple of examples. The first stock that we've chosen is a high-profile one, controversial one. We call it the growth stock for all seasons. Maybe it's a luxury brand, maybe it's the new iPhone, it's alternative energy, you name it, that's what Tesla is. But at its heart, we actually think it is a very small car maker with a very large market cap. We think markets can be irrational. We put this stock in a cluster of short opportunities called overhyped growth. And they have also been stocks that are beneficiaries of very forgiving credit markets. So what Tesla is, it makes 100,000 cars. That represents 3% of the current electric vehicle hybrid production globally, annually, 3%. So you have some competitors there. You may have heard of Toyota. You may have heard of those German automakers and the Koreans. This is already a very competitive industry. So we love the upstart. We like to celebrate the little guy who gets ahead, and Tesla has done an awesome job, make no mistake, to get where they are. The problem is they have to grow up, and growing up has its issues sometimes, growing pains, and that's what this company is experiencing today. Plus, a little detail, a massive shortage of capital. They need to invest heavily to scale production, and to compete longer term, they have to get scale. So we think it's a challenge. Now, this sort of short is always going to be volatile, you know, and it's probably a lot of the short base has been cleared out, which makes it interesting from our perspective. It's not crowded as it was 12 months ago. And it does have, we think, what we look for. So there's no margin of safety, and there's multiple ways this company can lose. So to put the valuation in perspective, enterprise value to sales is 6 times, market cap 1.5 times Hyundai. Hyundai makes 8 million cars and more than 100,000 electric motor vehicles. We like Hyundai, we own it in our portfolios, and we short Tesla. It also has been a beneficiary of easy credit. So already the company has high leverage, and they're going to depend on junk bond markets staying open to effectively survive. So if you're at all worried about low rates and the sustainability of low rates and low volatility, this is also a nice way to hedge that risk. So I'm also going to give you it's going to sound like a pair trade, but it's really not our way of thinking about constructing portfolios. We're looking for non-correlated longs and non-correlated shorts. But in the case of Tesla, we couldn't resist. So does it have any real intellectual property, this company? The batteries are made by Panasonic. Okay? All the battery IP sits in Panasonic. It's an assembler. There's another battery company called Samsung SDI. These companies, until very recently, have traded pretty much at or below book value. That is what the market thinks the long-term electric vehicle battery opportunity is worth. Very little. Now, this company has gone up, so now it trades at a 10% premium to book. But it's more than just a battery maker. It also makes small screens. You may have heard of OLED. So the current Samsung series of phones has an OLED screen made by Samsung SDI. What's so special about an OLED screen? They're brighter. They're ultimately thinner. So OLED is the technology that will ultimately facilitate a lot of flexible display and innovation in form feature of the phone. You know, phones, tablets, laptops, it is going to be screen technology which allows device makers to innovate. And this company has currently a monopoly in the technology. So this is currently a $15 billion revenue business. Samsung SDI has a minority interest in the display venture. But think about it. At the moment, the attach rate is 20% on smartphones. That will end up being 100%. And Apple's new phone out later this year will be the first iPhone to use the technology. So a very interesting technology company. Screen technology, battery technology, available at a very small premium to book. Part of it is because it's a Korean stock, and Korean companies historically haven't had fantastic corporate governance. We see that as structurally changing. Now, I am over time, so I'm going to have to wrap it up. But hopefully, the long and the short gives you a sense of how we manage money. And I'll have to end on the disclaimer, which I hope you'll all read. Excellent. Thanks.